I think that it's a good way to diversify. I'm a big fan of the 401k, right? So if you're working somewhere that you've got a paycheck and you've got the, ability to be able to invest in a 401k, do it, max it out, don't overspend, live within your means. And if you are able to kind of create a self-directed IRA, which everybody kind of can, then do that, deploy those funds. So I would definitely encourage people to do that.
All right, everyone. Thank you for joining us for another episode of Deployed. For those of you who don't know me, my name is Michael Kearse. I'm a real estate investor and fund operator. Over the years, I've worked with a wide range of investors who've built success in very different ways, business owners, professionals, and operators, many of whom eventually start to ask the same question: is there a smarter way to deploy capital, especially retirement capital, outside the stock market? So on Deployed, I'm not here to pitch. I'm here to understand how successful people think about capital risk and long-term decisions, and how to explore tools like the self-directed IRA fits into that thinking. Today, I'm joined by Daniel, and I don't want to butcher his name, Iturrizaga.
That's good.
It's good. It's good. He's a CFO at DIG Holdings and Trust. He's managing all financial aspects of project planning in order to ensure successful repositioning of real estate investments. Hey, Daniel, thanks for joining me today. How are you?
Good. Thank you for having me. Happy Tuesday.
Yeah, happy Tuesday. Thank you so much for taking time. I'm really excited. So before we talk investing, I love to get some context. What did your path to success look like?
What does my path to success look like? That's a really good question. So not to pitch any product or service, but I'll tell you, years and years and years ago, I played a game called Cash Flow. I don't know if you're familiar with it.
I was just playing that with one of my students the other day. Love it.
It is a phenomenal game to play with kids and with friends and with family. And it really teaches you that the main goal to get out of the rat race is passive income, exceeding your expenses, and you're kind of out of the rat race, right? Of living that whole paycheck to paycheck. So to me, success is defined by lots of different things. The main thing is financial freedom, which you acquire when you start having passive income that exceeds your expenses, to be able to give you that financial freedom to be able to kind of do what you want to do, invest or travel or grow, things like that. So to me, success is defined by financial freedom because it opens up the door to be able to do kind of more things.
I love it. I love it. And it's funny that you pulled up the game. Like I said, I was literally playing that with one of my students. I've been playing the online version where you can play with anyone anywhere. It's pretty cool. So thanks for bringing that up. And so can you talk a little bit about of what your past looked like? Like how did you get to become a CFO? What did that path look like?
So it's a really good question. So years and years and years and years and years ago, I was in the military. I was in the Marine Corps, right? So out of high school, I was like, listen, I don't know if college is my thing. Not really what I like. I did end up going. I went for about a semester. Halfway through, I was like, this is definitely not for me. So I joined the military, went into the Marine Corps, was stationed in Quantico. I did that, came home, got married, had kids, got my associates, and I was like, all right, let's see what we're gonna do. Um, and then right around that time, I bought my first house. I was around 04, 05. I bought a second house. And I'm like, man, this is like fantastic, right? I'm like 25 years old and like houses are appreciating in value and like there's all these things that are happening. Then you come and find out that it was the housing bubble, right? And then you see the
Yeah.
crash. And
Yeah.
so when that happened, it really, I'm a big CNBC and stock investing kind of person, and I'm watching that, and I'm saying I see a lot of red and I see a lot of green, but what does it really mean, right? I don't fully understand it. Went back to school, went to UCF, got my bachelor's in finance, kept going, got my MBA with a specialization in finance, and then from there it was all just looking at things. It's kind of like, I hate to say it, right, but it's kind of like the Matrix, right? At the end of the movie, he kind of sees everything and it all kind of clicks, right? So for me, it was kind of like that moment of studying finance to understand, profitability and margins and risk and reward and investing, right? And a dollar today and compounding and things like that. So I got my education underneath me. I got into banking. I've done dental financing in the state of Florida, extensively. And you know, I kind of got into that niche of dental financing, of dental offices. And through my time, kind of working, I've, most people, as you start making more money, your expenses go up. I looked at it as, if I make more money instead of spending more, I need to invest the difference, right? The delta between
That's awesome.
what I've been making and what my commission checks are. So Commission check is like, all right, what are we buying to invest in, right? Where are we putting this money to work? So I bought a couple of dental offices. I bought a building, and so that's kind of helped me with that. I've got a project in Orlando that I'm working on building some townhouses that will hopefully get done soon. And then just with what I've been going through, I was the CFO of a bowling alley for about 5 years, very successfully before COVID, through COVID, and just manage the funds, right? Manage the cash flow, getting a good understanding of, what comes in, what goes out, seasonality, expenses, capital expenditures, and things like that. And so it really gives you a good balanced idea to be able to understand that from a CFO perspective, from a banking perspective. So I've been a small business banker with small banks, large banks, and I enjoy working with those entrepreneurs that are out there trying to grow, right? And maybe sometimes need a little bit of help. Have somebody kind of dig into their financials and say, hey man, what am I doing wrong, or what can I be doing better? Or where can I really make a difference to be able to grow my business or have more profitability, right? And so, yeah, so all of that kind of put together has led me to kind of where I am, and where I hope to go, and in the CFO kind of roadmap. Hope that answered your question.
No, no, it was thorough, and I like the underlying of what I'm hearing is that, to your point, is that you went and got the education, right, and everything kind of unlocked for you, and you were wise enough to understand that, hey, I'm not going to go out and blow this extra money. I'm gonna put it into some assets. And I remember when that light bulb kind of clicked for me too. It's just like just acquire assets. You can't go wrong. It just becomes a point of discerning which assets makes the most sense to acquire. It's pretty cool. Was there a moment where your relationship with money and risk really changed?
So I've really been I've always been more risk seeking than risk averse on the risk curve. And I don't know that there was a particular moment where it changed. More so it's to me it's about the structure, right? It's about how do you get into an asset and what it's going to represent for you long term, whether it's the appreciation of the asset or whether it's going to be more of the monthly cash flow, and kind of go from there and determine what's going to be kind of the best angle. I would say some of the very unique junctions that I've had with money, with finances would be, and we've all lived through it, right, is during COVID. So rates were really, really low. So that's an opportunity where, you kind of take a look at it and go, okay, where am I? How can I be a little bit more aggressive? How can I take this opportunity to grow? I'm not one of these multi-millionaires who's got extra cash laying around that's ready to deploy. You kind of have to decide, how do I take the situation that I'm at and really try to take that step or two to be able to grow. And I'll tell you, for example, I refinanced my house, got a 2.25% interest rate. So that
Wow.
that lowers my cash flow from my own house. And that same house went up in value, as everybody knows, right? Prices really went up 2000 or 2020, 2021, 2022. And I said, it's great that I have, hundreds of thousands of dollars in equity, but, having a brick here doesn't really help me to kind of grow.
Mhm.
I took the opportunity to take out a line of credit, got it fixed for a really low rate, was able to cash out, 300,000 plus. And I put that money to work buying a building. So now it's a combination of opportunity, right? And being able to find the right asset to be able to understand how to deploy it. Both again, from a cash flow perspective and a appreciation, right? And I think that's really important, because I feel like a lot of people say, man, you're really lucky, right? And so we hear that a lot, right? And we always hear it's better to be lucky than good. And I feel that luck, in my opinion, and the way that I look at it, is luck is the intersection of knowledge and opportunity, right? So we can have all the knowledge in the world, but if an opportunity doesn't come up, then we don't, we can't create our luck. And opportunities can come by us every single day, but if you don't have the knowledge of how to act on it, right, it's like you're seeing it, but you don't know how to jump on it. So when you have that intersection of knowledge and opportunity, you can really create luck, right, to be able to kind of grow. So I've been very fortunate. I've been very lucky, and I've made some good acquisitions along the way that have yielded, good returns.
Danny, you hit the nail on the coffin. I know oftentimes, like, friends and peers often say the same thing, like, oh, I'm lucky, when they had the same opportunities I did. They just didn't have the knowledge or the courage or make that decision, right? They chose to do something else. And oftentimes, to your point, our life is just a sum of decisions. So thank you so much for sharing it. What do you think separates people who accumulate capital from those who actually deploy it well?
So I'm a big believer, and I say this to my kids, right? And I'm a big believer that there's two types of people. There's the people that are looking for money, right? They're living paycheck to paycheck. They're in the rat race, and they're like, how can I get that side hustle? How can I make that extra buck? How can I grow? And where can I find the cash? And then there's the people that have the cash and need to be able to deploy it, right? To your point, it's like, where do I put this money? Because sitting in a bank account isn't doing anything for me. I'm not putting it to work. So it's important to be able to kind of have that understanding of when to deploy it and how and have your own criteria, right? So like when I buy real estate, it's I look at a couple of different things. It's lowest cost to be able to get into it, right? Number one. Number two, does it service the debt on its own, right? Because you always want to leverage, so you take out some debt. And then number three, what's my long term appreciation? What do I hope to get out of it? So I'm not a big fan of residential real estate. I do commercial. A lot of people think that commercial means that you're buying a $5 million building. That's not true. I've bought, dental offices for $250,000 and signed a 10-year lease, right? So it doesn't mean that you're buying a $5 million building. You could be buying, 300, 500, $700,000, you know, buildings that are commercial, that are gonna have a long-term lease, that are gonna have that cash flow, that yield appreciation, that, if you structure it correctly, I think would be a great opportunity to kinda go out there and win.
I love that. I love that. I just recently started looking at acquiring some businesses, and I never even thought about, to your point, commercial real estate and just getting a long term tenant and lease. But that's kind of similar to what I do with the single family home. So I love it. I love it. How do you personally think about risk today versus earlier in your career? I know earlier you mentioned that you sought out the risk. Has that changed from earlier on?
As you get older, you've gotta manage your risk, and I know that I look young, but, I'm getting older in age, and so you gotta manage that risk and assess it as best as possible. I'm still risk seeking, but I'm probably a little bit lower on the risk scale, right? I've kinda come down from really 100% in to kinda coming in a little, and so you wanna make sure that you balance that, right? So cash flow starts to become a little bit more important, and making sure that growth, right, is there and is consistent, and you're managing the risk, right? It's kind of like you don't, to put it to you in stock terms, right? You can buy options every week that expire daily or weekly, but you're really risk seeking, risk reward, or you can buy stocks and just let them appreciate, and there's some that can go up, 10, 15, 20%, and that's great, right? That's a great rate of return annually, but you're at least into stocks or ETFs that are going to be a little bit more balanced and not so, aggressive when it comes to taking risk.
I love it. I love it. I love it. How about liquidity? What role does that play? Do you try to keep cash on hand, or are you always trying to get it moving?
It's a good question. Liquidity is important. I look at liquidity more as a buffer for my monthly cash flow, because I want to try to have cash deployed kind of at all times. And I wouldn't necessarily call it the FOMO, right? But at the same time, I watch the stock market every day, and I think that there's opportunities all the time, and I'm looking for a deal, and I want to be able to put the cash to work, even if you put it into something that yields you, 1 or 2%, but at least it's growing and it's moving for you. It keeps me plugged into the market, right? So a lot of times I'll talk to people about whether it's real estate or the stock market, both are investing, right? It depends on if you're looking for long term or short term, or what kind of vehicle you're looking for. But there's a lot of people that will tell you this is good or this is bad or do this or do that. And I always ask a simple question, and I say, what are you in, right? Because it's easy to talk from the sidelines, but the minute you jump in the game, you start paying attention to things a little bit differently, right? The defense is in front of you, right? You need to move up the field. You need to make sure that you're scoring. So once I take my liquidity from the sidelines and I put it on the field, you're really paying attention to kind of what's going on around you. And it's always really helped me, right? It keeps me in tune from lots of different aspects. Like I said, as a small business banker, as a consultant, it allows me to talk to entrepreneurs and any setting, right? And understand kind of, hey, what's going on in the world around us, and when somebody says, well, what are you doing? Well, I can speak confidently to, like, well, I've got money here and I've got money here, and these are the things that I'm doing because I'm in the game, right? And you don't always win. Sometimes you lose, but I look at it as I do in chess. Either you win or you learn, right? So
I
um,
like it.
in any way we're moving and progressing. And it doesn't always come in dollars. Sometimes it comes in knowledge.
I love it. I love it. I love it. At this stage, are there any kind of investments that don't interest you?
Crypto, that's an
Yeah.
easy one. Yeah, nothing that has to do with crypto interests me whatsoever.
Have you tried crypto and just like, no, this is, or you just like, nah, nah.
No, I haven't tried it. I'll be honest with you, and I'll tell you that, like, you have to be, in my personal opinion, right? You have to understand trends. I'm not gonna turn a blind eye and say that it doesn't exist. So like I've bought and I've invested in Riot blockchain, right? I made great returns last month on Riot, probably 30%, right, in a matter of a month. So I do believe that crypto is there and that it has gains and losses. The question that I always ask about crypto and like all these coins is I haven't had a chance to speak to somebody about the valuation, right? Tell me what it means. You get some people that say it's a store of value, and then there's some people that say, we're going to use it as a currency. And it's like, well, if it's worth so much, you wouldn't use it to buy a coffee, right? So, and if it was so transactional, you don't want it to have so much volatility, right? I believe there was a wide receiver from the Giants. I think it was Odell Beckham that one year got paid on Bitcoin, and it's like it's great when it's up, right? But do you really want to have that, 10, 20, 30%, crypto winter, and then all of a sudden you're going, man, I worked really hard. I didn't cash it out on the high, and now it's worth half or, two-thirds of what it was before. So
I like stocks. Yeah, yeah, yeah.
yeah, yeah. From a valuation perspective, I don't like crypto.
Yeah, yeah. I think I do remember hearing about that. I think he just signed back with the Giants too. Crazy. Coming out
Would
of
be
retirement.
great.
Yeah. So how do you decide if something is worth your attention versus just noise?
So I try to do homework. I try to look at trends. It's gonna depend on amount, right? Like how much am I risking? How much am I putting in? What's the time frame that I'm looking at? What's the yield or what's the return that I'm hoping that I'm gonna get? What happens between here and there? So I've done some hard money lending in the past. I own real estate, commercial real estate. I buy stocks. I don't do, ETFs or the SPY. I do, I'll pick and choose kind of stocks, symbols, individual stocks. And then when it comes to real estate, I mean, man, I try to be very specific as to what I look for, and I just want to make sure. So for starters, I buy dental offices. I know and I understand those very very well. I think they're like the best kept secret. So I buy real estate. So just to be clear, real estate, dental offices, because in Florida, in order to be able to own a dental office, you have to be a dentist. So I buy the real estate, and then the dentists are my tenants. Usually, I jump in whenever there's a transition. So you've got one selling doctor, one buying doctor. They're usually getting a loan from, a company I've worked at before, whether it's Bank of America, TD Bank, PNC, whatever. And that bank will usually give them a 10 to 12-year loan. But in order to be able to do that, they need a 10 to 12-year lease, right? So that's where I come in and go, now I've got a 10-year tenant, right? So I'll buy from the selling doctor. And it's real simple. I'm not gonna argue or debate the inflated price that you're giving, because most people, I'm gonna list this for $10 million, and right, and then I'll come down to 8. I'll give you the 10 million, but I want to structure it in a way that makes sense for me so that the cash flow works and the appreciation works and everything around that works. And it's worked well for me. I've had some gains and some losses, but for the most part, it's done well. And then I've got a tenant that, 3, 4, 5 years in, I say, hey, you want to own your building? I'll sell you the building, and they're able to buy it, and or their office, and it works out for all parties involved. So yeah.
That's awesome. That's you giving me some great ideas. I mean, that's kind of cool because you were plugged in, right? You used to be a CFO at these dentist offices, so you kind of understood the finances behind it and seen the opportunity. That's pretty cool. Switching gears a little bit, talking about the self-directed IRA. Do you have one? Are you familiar with that product?
I actually am extremely familiar with the self-directed IRA. At one point, not long ago in my career, was my claim to fame. Yes, I do have to answer your question, I do have a self-directed IRA. For a while, I was working at a bank where the main goal was to acquire deposits, and so I've worked with lots of self-directed IRA companies. I can tell you honestly, it was quite an adventure, right? So how did I get started in it? Very coincidental. So I worked at PNC Bank for about 4 or 5 years, had my 401k, and then I moved on to Capital One, and I said, man, I've got like, a good amount of money in my 401k. And I feel like, again, going back to my risk seeking versus risk averse and, you know, real estate, I said, I wish that I could do something with this money, but I don't want to pay early termination fees. And like, how can I do this? So I started Googling before ChatGTP was a thing. Right. And I said, how can I figure this out? And I came across this, self-directed IRA, and I started doing some research, and I said, all right, well, it sounds kind of hokey, but I'll give it a whirl.
Right.
I'm in South Florida, and so there is a firm that is they have an office in South Florida, and I said, at least I'm going to go with this one because at least I can go and knock on their door, if I ever have any questions. And I went and I set up my self-directed IRA, and I did some hard money lending, and it was fantastic. It was fantastic. I then went to this new bank, and I said, man, our products and services would be great for the self-directed IRA industry. And so I met with the president of that company, right? Which was a unique transition because you come in as a client and you say, hey, now I want to talk to the president, right? Because I want to talk about some stuff. And they're like, well, what happened in the process that you want to talk to our president? Like, that's not normal.
Yeah. Who are you? What are you trying to poach? What are you doing? Right.
Right. So he's a phenomenal guy, right? Shout out to Adam Bergman. He's an amazing individual from IRA Financial. And then we sat down, we had lunch, and we formed a great relationship. And ever since then, there's been probably 4, 5, 6 nationwide that I have met with and discussed banking and kind of how they handle and manage their business. And so I've I don't know that there's very many people because, the self-directed IRA world, in my opinion, is a little bit of a unknown secret. That's a great, great, great way to be able to diversify your retirement and put funds to work. And I got a chance to meet with several big players in the self-directed IRA industry. I've been to some of their conferences as well, nationwide. So, no, yeah, long answer to your short question, but yes, I have a self-directed IRA. Yes, I'm, very familiar with what they are. Yes, I think that they're amazing. And yeah, 100%. Uh-huh.
Yeah, yeah, yeah. I told you this would be awesome, man, because you know about it. So that's great to hear. It's so exciting to hear you kind of talk about it that way. You're probably the first person outside of me talking to actual custodians get excited and really big it up. So that's pretty cool. When you first heard about it though, like what questions or concerns came up for you?
The first obvious question is like, are these people going to steal my money? Right. And I think that that's like a fair question. I'll tell you, in working with a custodian and having their banking relationship, I would sign, a lot of the LLC accounts that they would have. If you're familiar, right, with what the LLC account is, and so I would get people that would call me because my name and my title and my phone number was there, my work number, and they'd call me. They'd be like, "Hey, like, is this real?" And yes, it's real. It's not a scam. It's a real bank. Your money's protected. They're your custodian. Like, this is the process. You're good. And they're like, "Are you sure?" And I'm like, I have gone, knocked on their door. They have my money as well. So yes, it's
Yeah,
all above board. So
that's
that,
funny.
but I mean, it's a I can understand, and I was there at one point, right? Like, you're taking your retirement savings that you've got, and it's a lot of money, and you're basically just saying, yeah, I'm gonna wire it to you, and you're gonna set up this account that I can manage, but it's really under your name. So, yeah, I that's a legitimate concern that somebody could have.
Yeah, yeah, absolutely, absolutely. When you hear self-directed, but back then, or once you started to understand it, what like surprised you the most about it?
Twofold, right? So it's the same answer for both. It's what you can do with it, and then like what you can do with it. So you can do like, because you want to understand what are all my options that I have when it comes to investing. So, you can obviously, put it into the stock market. You can do some hard money lending. You can buy real estate. And then, at the same time, like, if you're going to open up a business, you're limited to a certain percentage. You can't do a hard money loan to like your parents or your kids. You've got to have like an arm's length transaction to be able to do that. So, kind of understanding what are prohibited transactions versus what you can do and how you can invest. the reporting that you have to do, right? Every year you got to let them know the value of your assets and kind of go from that. So, it's just having a good understanding of, all right, I've got X amount of money in my retirement account. I want to be able to put it to work my way. What's the best vehicle? And then like to get from here to I finally have my assets and I put my money to work and it's kind of that process in between.
Yeah, you just reminded me of the reporting. They've been sending me stuff. I had just recently bought some land, and I guess I gotta kind of like tell them like what's the value of it. So you just remind me of that. What types of investment made sense for you to invest in? I know you mentioned hard money lending.
Yeah, so again, right, that risk continuum, right? So I enjoy hard money lending because you're gonna get a good rate of return, but a high risk, high return. And then I I'm a big fan of real estate. So real estate is really where I put the majority of my investing. And then I do have a stock portfolio. So I do a little bit of all three. The least I probably do is the hard money because it's difficult to be chasing people to have them pay you. So, if they needed a loan, it's for a reason. Unlike I would think that the average self-directed IRA individual, because I have a banking background and I've done lending, it allows me to kind of understand, well, let me look at what it is that you're trying to do and what's the profitability and what are the margins and are you going to be able to pay me back? And, if you don't, then what's my recourse, right? And, things like that. But yeah, I mean, I've done some really successful ones. I've done some that have been terrible. But you again, if you stay on the sidelines, right, you don't really know what's going on. You got to get in the game to know what it really feels like.
Yeah, no, absolutely. Thanks for sharing. And do you think more successful people would use the self-directed IRA if they understood it better?
I do. I do. I think that it's a good way to diversify. I think it's important. It's an important part of diversification because, I'm a big fan of the 401k, right? So if you're working somewhere that you've got a paycheck and you've got the ability to be able to invest in a 401k, do it, max it out, right? Even if it seems like it's one drop a month, just do that. It'll build. Don't overspend. Live within your means. Put some money for, investing. And then, try to see what you can do within that, right? And if you are able to kind of create a self-directed IRA, which everybody kind of can, then do that. Especially like, I think that there's a very big underserved community of self-employed individuals, realtors, mortgage brokers, right? That are 1099s that don't have the option of a 401k. You can put some funds into a self-directed IRA every year and, deploy those funds. So I would definitely encourage people to do that. 100%.
Yeah, yeah. Thank you for putting that out there. Why do you think retirement capital often aligns better with passive income or passive investments, I should say, versus like active investments?
When you get to the point that you are looking to retire, right? When the point that as I said in the beginning, right? You want to try to get your passive income to exceed your expenses. So by default, right, if it's active and you have to go in there and you have to do something every day, it would be, I would think of it more of a job, right, than true passive investing. And so in order to be able to really, really feel like you're into retirement, I would think it would almost have to be, unless you're semi-retired, right? It would almost have to be passive income.
Makes total sense. Makes total sense. And what does a good passive investment look like today? Would you
To
say?
to it's a good question. So currently, I would say I'm in that semi-retired stage. So I literally this morning, it's June 2nd. So June 1st, I went and I picked up my rent checks from my commercial properties, and I went today, deposited them at the bank because I'm old school like that. And again, right, passive income, expenses. So yeah, I mean, to me, real estate it's consistent, right? It's predictable. You could kind of see it coming. I personally like doing triple net leases. If you're familiar with what those are, I think that those are important. I think that it that's a big differentiator between commercial and residential real estate. Having
Could you
that
explain triple net leases quickly?
Yeah, absolutely, absolutely. So, when I have conversations at dinner parties and people say, "Yeah, yeah, yeah, I do investing. I buy, I'm looking to buy some real estate," right? My first question is, "Are you doing residential? Or are you doing commercial?" And they say residential. And so my thought process, the way my brain processes the difference between one and the other is that the majority, right? So majority being 51% or more, that's going to keep me safe. That's my disclaimer. The majority will be, basically what market rent are. So let's say that market rents are $2,500, right? For a 3-2, pick wherever you want, USA. Out of that $2,500 that you collect, which is what the market has set as the rate, you're going to subtract from that your mortgage, your interest, your taxes, and your HOA, right? So if we do, I don't know, $1,000 mortgage, we'll do $200 for taxes, $300 for insurance, and $100 for HOA. You're at what, $1,600? You're making $900 in passive income, right? As we know recently, taxes can go up, insurance can go up, and your escrow will go up, but your tenant is there, and it's it's usually a 1-year lease, right? I always say that if they don't renew, you're really always out of 13 months, you've got 1 month that you're not making any money, right? So factor that in, because if they don't renew, you've got to find someone else. And even if you were to find someone that if you're that lucky that, one contract ends 12/31 and the next one starts 1/1, I would be very confident in saying that the new tenant is not going to like everything the way that it is, and they're going to say this needs to be fixed, needs to be fixed, and this needs to be correct. Correct. So, and that eats into your investment, right? And into your margins. So you automatically, like, that's coming down. So I usually write all that down on a piece of paper with somebody, and I go, this is what a residential investment looks like, right? So your 2,500 minus your 1-year contract minus, there you go. Now, when you look at a commercial, right, the way that I like to do it, I like to do 10-year leases, right? First of all, I've got you for 10 years. I put 3% increases on the base rent every year, right? We don't even have to fight or argue about it. It's right here on the lease, right? You know what it's going to be every year. So what a triple net lease is, to answer your question, and I apologize for the long answer to your short question, but what a triple net lease is going to be, I'm going to charge you a base rent, right? So base rent is, I don't know, $20 a square foot, right? And my unit is 2,000 square feet. Well, that's $40,000 divided by 12. That's going to be what your monthly rent is going to be. That is your rent. That is what I get. That is how I get my passive income, right? On top of that, you're going to pay taxes and HOA, right? So if the HO and that's stipulated on the contract because it is a triple net lease, right? So if for some reason the HOA does a special assessment, I apologize, but that's your bill, right? If the HOA says we're going to improve the condominium and we're going to do something, I pass that bill along, right? If the taxes go up, right, I pass that bill along. So it protects me from what my income is. And then keep in mind that these people are running a business, right? So for them, it's a business expense. So it's a completely different thought process than the residential side where they're going, oh my God, I can't afford this, right? The commercial property, my rent should be their rental expense should be one portion of all their other expenses and their margins and how they run their business. The other thing that I tell all my tenants is, listen, this is a partnership, right? Your success is my success. Your failure is my failure. I can tell you that I've had the situation where a tenant one time said, hey, dude, here's the key. I'm done. I'm out. I thought it was going to be my biggest nightmare. And, a door closed and I opened a window and it ended up being a good situation. So, again, knowledge, opportunity, right? So I've had those scary moments that I hope that I would never have, but I've gone through those. But yeah, so a triple net lease is going to be your base rent plus the expenses, and those expenses get passed on through to the tenant. And so whether it goes up or down, that's their expense, has nothing to do with me. Unlike the residential side where they pay me one rent and then everything comes off from there.
No, I like that. I do something very similar with my real estate model, which is a bit unique. So I'll get a property for, let's say, $50,000, right? I won't do anything to it, and I'll borrow money from a private lender to purchase it. And then I'll take that property and then I'll market it to someone who has not so good credit or who's tired of renting, who would never be able to qualify for a home traditionally. And I'll give them a ownership opportunity. I'll say, hey, instead of paying $1,000 to rent that property, pay me $1,000 a month for 30 years and you can own this property. So just like a bank, give me a down payment and I'm not your landlord. You're not my tenant. You're responsible for the taxes, the insurance, and any other fees that or expenses that come with this home. So in a sense, it's very similar to what you do. To your point, right? I always make sure that I get my 400 or 500 monthly nut, whatever I want to position myself as. by leveraging the private lenders' money, and it's worked out great, right? So very similar to what you're doing from the commercial side, which is the difference in what I really like about commercial is, to your point, it's a business, right? You don't have to take them to a landlord tenant court if they don't pay the rent, right? You could just take that facility back. And like your point, I had some great home runs and I had some that have not gone so great. But what I really like about it is the property is the collateral. So just like being a regular landlord, I could take that property back and then I just sell it to someone else. And like a traditional landlord, I don't have to make sure that that property is in top tip condition because I'm gonna sell it as is, and they will still move forward with it because of the opportunity of home ownership. So,
100%.
like you said,
100%.
knowledge and opportunity, it's worked out great for me. And
And
um,
it's important what you said, right? And I always keep that top of mind because I feel like too often whenever people are talking, they only talk to you about their home runs, right? And it's like home run and home run and home run, and you're going, you're not real, right? Because anybody that's really gone in there has taken their hits because no
law
one's
of
that
average,
perfect.
yeah, law of averages is
Right.
just going to happen. It's going to happen.
So yeah, it's like talk to me about the time that you got whacked, right? I want to hear about that and how did you overcome that, right?
Yeah,
That's the interesting stuff. That'll show some character.
I
So
remember when I first spoke to some local attorneys, and I'm a little bit more green. I probably had maybe 10 at that time, and a couple of them was like, "Well, what are you going to do when they default? Because it's going to happen." And I was like, "It's not going to happen." And of course, right? Of course, it's going to happen. You're when you're lending to individuals with not so good credit, right? There's a reason, but overall, right, the good outweighs the bad. So yeah, you're going to have that. You got to get in the game. You're going to win some, you're going to lose some, like you said earlier. What advice would you give someone sitting on a large retirement account who feels stuck in like traditional options?
I would say get a self-directed IRA. Don't look at whatever the fees are going to be, right?
Mm,
Don't reach your hand in someone else's pocket because you don't want them reaching their hand in yours. So, and then decide what you'd like to invest it in, right? I would probably say that do that first, and then put your money to work, put it in the game. I mean, I met with someone last week that they're like, I'm sitting on $250,000, and I'm going, my God, why are you sitting on $250,000? Like, even if you put it in the SPY, right? Like at least get something out of it, but you've got it just sitting there doing nothing. Put it to work to do something. So yeah, I would definitely recommend someone, especially if it's in retirement, to look at putting it into a self-directed and being able to put it to work.
I love it. I love it. And what kind of conversations do you think more investors should be having about retirement capital?
Conversation that more investors should be having about retirement accounts. That's it's a good question because it has you added a couple things in there, right? So if we're talking to an investor, right? The question then I would have is, what do you invest in, right? How risk averse or risk seeking are you? What are your goals, right? And then try to find a plan that fits your criteria, right? So you never want someone to get into something that's necessarily outside of their comfort zone, even though I'm a big believer that growth happens outside of your comfort zone, but you want to be comfortable with where you're putting your money, right? You want to have a good understanding, you want to do the research. And there's so many different avenues to be able to invest in that I always think that that's one of the important things. And there's so many tools out there that can really help you. I have a lot of people because I date, like I said, I day trade and I own real estate, and people go, dude, like you're playing golf at 2 o'clock on a Tuesday. Like, what are you doing? Right. Well, because I have passive income, right? I can do that, but I set myself up for this. And so they're like, well, what can I do? Well, it depends. What do you want to do? Right. What's your goal? How much money do you have? And I'll get people that say, I've got $300. What do you hope to do with $300? Because a good return is 10% annually. You want $30? It's like, here's $30, right? Like, they go, "No, I wanna turn 300 into 1,000." Well, you can get that. You're gonna risk your $300, right? Put it in an option that's gonna expire today, and, you can, but you can also go to the casino and, 50-50 that. So it's a matter of having a good understanding and, from my banking days, and I can tell you that those are you really wanna ask the right questions, right? I don't think that there's one size fits all. Everybody's different. I love having that conversation. I love having that understanding of, where are you at? What do you have? What do you hope to get out of it, right? How long? What's your horizon for that? So those are all, really good and important questions. If you have $1 million, but you say, listen, at a whim, I might need some money. Well, don't buy real estate. Put it in the stock market. You could sell it in 2 or 3 days. When it settles, you can pull it out. Right. So it's gonna depend. It's gonna depend.
No, not a great question. Danny, this was amazing. Thank you so much. I really, really appreciate it. I know it's going to be awesome. For those of you watching live or for those of you watching recording, if this conversation resonated, please share it with someone who's built success and is now thinking more intentionally about how their capital is deployed. And if you're curious about the self-directed IRAs, going to be used for passive real estate backed lending, you'll find resources in the description below. Thanks for listening, and we'll see you on the next episode of Deploy. Thanks, Danny.
Thank you.
Because I did it. Okay, I guess it's still recording live on mine. Well, like I said, they switched this UI connecting to the studio, and it doesn't say stop on mine. Okay, so stopped on your end. Okay, awesome. Well, let me stop these just in case we're still broadcasting live. Stop these. I don't know why they changed this. Yeah, it was like one or two people joined. It tells me when they joined, but it's not. The record is not stopped. Let me see if I push it. I wanted to talk to you afterwards. My guys are edited. Can't. I'm sorry about this, man. What is going on? They changed it. Anyway, your what you were sharing about the dentist offices was very interesting. I think I mentioned it on the call. I'm looking at a couple of businesses to invest in and or buy more around my wheelhouse of what I know, like property management companies, maybe laundromats, HVAC companies, things like that. People that touch and are exposed to real estate investing. So would love to kind of pick your brain on that a little bit more. Also, too, like I mentioned earlier, I'm always looking to raise money for my deals, fix and flip deals, my debt fund that we have, a 8 million raise goal. So if you're open to it, I would love to schedule another call, to maybe share with you some of those things that I'm doing. Maybe you know someone that may be interested. Completely, if you're open to it, I would love to talk that. If not, completely understand. I'll share opportunities with you from time to time as they come up. Yes, 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 yes. I think I added you to the network soon before we jumped on. I meant to remove you. Yeah, yeah. Yeah, one is one that I'm acquiring. That was one of the deals, like I told you about. We're going to buy it at 53. We're going to sell it for about probably 138,000 to a tenant buyer. And then the second one, I already own it. I already borrowed money on it. I already have a tenant paying me. I think we're in like year 4, and I'm just refinancing. The property appraised a little bit more. I'm paying off the lender, walk away with a little bit of money, and then put a new lender in place. Yeah. I am in the Philadelphia market. Yeah, yeah. Right outside Philly, Drexel Hill. Yeah, yeah. And you're near Orlando? Orlando? That's nice. That's awesome. Yeah. New construction. Nice. Nice, nice, nice. We're gonna be in Orlando in about 2 weeks. My daughter plays volleyball. Yeah, so I'll be down there with the kids. Hopefully go to see Disneyland a little bit. Fun, fun times. Fun times. Yeah, yeah, yeah. But yeah, all right. Does it make sense for us to schedule another call, or would you just like me to send you some stuff every once in a while? Okay. All right, cool. Let me bring up my calendar here. And I would love to maybe tap your network with the custodians. Another thing that I've been doing is I didn't realize there were so many of them. I got first exposed to Equity Trust, was who I put my foot on. Yep. And a lot of my lenders use Horizon Trust. And I did, so I've been doing some webinars with them and some joint podcasts, but I would love to get into there a little bit more. And I know it's hard for them to kind of like promote me. They're not allowed to do that, but I got to start going to some conferences and some things like that. Cause, yeah, yeah, I'm getting on it. You just reminded me that I need to do that. All right, cool. So this week is shot. How about next Tuesday or Thursday? Okay. Same time. All right. Awesome. Yeah. I'll send you an invite. It'll be a Zoom. It won't be Riverside. And then that way you can update your background if need be. All right. Danny, you're awesome. Thank you so much, man. I look forward to chatting with you.